Well, welcome to this week's edition of the Property Buyer and Sellers Podcast. And this week it's the 1st of November 2024. And this week we had Rachel Reeves's budget. And I just wanted to talk through my take on the main points for the property market and how I see things panning out from now forward. Just my opinion and not financial advice, of course, as always. But let's look at what we know and how it might impact the market. First of all, capital gains tax. It was widely held that capital gains tax would be put up. And in fact, the rates have remained the same. So that will be a relief for many investors. That's good news. The bad news is for those same investors looking to invest in further residential property, stamp duty has now increased to an additional 5%, where it was 3%. And that's on top of the existing rates of stamp duty. So this makes the barrier for entry to investment or buy to let really outside of many people's reach, where it was just within reach before, and certainly will cause many people that were thinking of investing in buy to let to maybe think again. Now, how this will impact on things, well, that on top of many other measures, particularly and specifically the Section 24 inability of landlords to offset interest rates against their interest payments, I should say, against their rental, has led many landlords, this is individual landlords, not companies, to think about selling up because the profitability is just not there for many landlords, especially highly geared ones. So what we expect to happen here is there will be less buy-to-let investment. Put that on top of the fact that there's already many exiting the sector. And I think what we're going to see is an even greater imbalance in the supply of properties available for rental and the number of landlords able to provide them. And the government, I think, has really underestimated the scale of this problem. To give you some idea, the private landlords, how many private landlords do you think there are in the UK? Well, I'll tell you how many homes there are. 4.6 million homes. 4.6 million homes are provided by private landlords, and they are desperately needed, particularly in commuter areas, in order for tenants to be able to get supply and affordability and literally somewhere to go to. Across the UK, the ratio of homes available to number of people chasing them is between, I think it's about 23. Here in London, that figure is much higher. And therefore, the idea that you can stifle investment into this sector, which seems to be what they're doing, seems to me to be a massive mistake, a real faux pas. Time will tell, but that's what I think. I think what we're going to see is less people coming into the sector to invest, and therefore less supply, and therefore higher rents and less availability, landlords being more selective, and inevitably this means the poorest and the least able in society will find it harder and harder to find somewhere to live, which is a very serious thing, and I think is quite sad, actually. So we see demand increasing, supply decreasing. It's obvious, isn't it? In terms of existing buy-to-let landlords, yes, rents are going to go up and they're going to continue to go up on a lack of supply. The other thing is the mortgage guarantee scheme has been extended. This is good news. If you're a first-time buyer looking to buy somewhere, you can still get that top up if you don't quite have all of the deposit that you'd need in order to get on the ladder. The mortgage guarantee scheme has been extended, and therefore that might help you get on. The second thing, and the bad news for first-time buyers, is of course that stamp duty will increase from next April. And this is quite a significant thing. By next April, the average buyer of a home here in London, where the prices are between 400,000 and 600,000 here in South London anyway, that's the sort of price range that many first-time buyers are coming in at. The savings are in their thousands, they number in their thousands, and therefore many people will be looking to get in before the stamp duty rules change in the new financial year next April. So I think what's been created here inadvertently is, yes, you've heard it correctly, this is another cliff edge. So what I expect will happen now is the price brackets for first-time buyers will be hugely popular between now and April, because this is the time when buyers will be clamoring to get on board, because the savings will be substantial. You will be paying a lot more in stamp duty post-April 2025. So we expect first-time buyers will be clamoring to buy to let investors will be holding off on their purchases. And I suspect, and certainly what we've found so far, is that we've been seeing a lot more first-time buyer investment over the past year and a lot less buy-to-let investment. I think this trend will continue, but because of the fact that we've got the stamp duty cliff edge next April, I suspect this will provide a real fillip for the market, and we'll see a bit of a boost between now and then. So if you have a property that you're thinking of selling and it falls into that first time buyer type bracket, it could be a smart time to move between now and April, because you should find a substantial number of buyers out there looking to rush to get in before that April deadline. But it's early April, so you really need to be thinking about getting a wriggle on fairly early, and maybe unusually going this side of Christmas rather than the other, in order to make sure, because first-time buyers are going to want to lock it down as early as they can. With the average transaction taking between 12 and 16 weeks, you can see that actually we're much closer to that deadline than it might first appear. So that's it as far as the market is concerned. As far as the general budget is concerned, interest rates, the next thing I want to talk about. Interest rates, we've got the MPC, Monetary Policy Committee of the Bank of England, meeting next week. Their worry is inflation. Their whole reason for being is to keep inflation under control. The problem is that post this budget, we now find that interest rates on the swap markets are going up, and it's volatile. Now, it's not as bad as the Kwasi-Kwarteng budget. We're certainly looking at something a little more settled, but we're certainly seeing a spike, and that spike may prevent the Bank of England from reducing rates next week. I hope I'm wrong, and I hope they do manage to reduce rates by at least 1/4 point, but I have a horrible feeling that it's going to be a hold, not a cut. And I think this budget will lead, and certainly the projections are that this budget will lead to slightly higher interest rates than were previously anticipated. Time will tell. Overall then, fairly neutral as far as the market's concerned. Less buy-to-let investment, more first-time buyer investment. Post-April next year remains to be seen. It's going to be a tougher environment, and it remains to be seen how the market will react to that. But we're at the coalface here at James Alexander, and we'll be telling you what's going on actually at the coalface, at the front desk, what people are saying, how they're feeling about the market, and what confidence there is around. The problem with the UK is there's only two choices, aren't there? You can either buy or you can rent. And with a lack of availability to rent, buying seems a sensible choice. But with the barriers to entry getting ever higher, such as the 5% stamp duty now add-on for investment buyers, and of course, the greater stamp duty for first-time buyers post-April, it seems to be getting ever more difficult for an already difficult situation for those that are in rented accommodation. Just trying to raise that deposit is really tough. So the extension of the mortgage guarantee scheme is certainly welcome. And overall, the picture is not as bad as we thought it might be. But as you can see, there are a few hurdles getting in the way of the average buyer. So thanks for watching as always. Interested to hear your comments and your take on what's happened so far. And as always, leave your comments, likes and shares, and email me, ken@jamesalexander.com, if you've got anything you'd like to say, and we'll certainly incorporate it into the next show. Until next week then, look after yourselves and your family. Ciao.